Again, thank you everyone for joining us. This is part of our series of holistic financial webinars. We do several of these throughout the year, and I do recognize some of the names as people that are perennial participants. So thank you. This will be recorded and made available on our website, as well as emailed out to those who did register. If you'd like to see any previous webinars that we've done, you can see those on the website as well. We've done several that have included estate plans, we've end-of-life planning with the funeral home director. We've brought in people to talk about cybersecurity. We've done our own on Social Security and education savings. So there's a lot on there. I encourage people to take a look. As I said, too, this is part of our holistic plans. So it's become a buzzword in our industry to become holistic advisors. But that has been the way that my dad originally really set this company up to truly work with other professionals to help people have a full picture, and in this case, full protection of their plans. So oftentimes we like to give access to other professionals, some of the best in the industry. Many are local, and in Kapiloff's case, as well as a few others we work with, multi-generational. So my dad had been working with Michael Kapiloff for years, and I've been working with his son Alex, as well as other family members. So something I'm excited about here. And the other day we had our annual meeting to review what we'll be doing for 2025. Incredible to think we're already almost there. So we'll be doing several webinars like this, some of our favorites among participants, as well as a few newer ones for topics that we haven't covered in the past. So with that, I will get us started here. And one of the things we're making sure to go over, this is a newer presentation for us, but I think a very important one, looking at, insurances. We set up the plan. We have all of these things for clients of this is what we're going to do in the future for your investments and all of those things. And all of that can change overnight if you don't have the right protections in place. And this is an area that I don't think is given enough attention on a day-to-day basis with people, especially as we've gone through COVID and we've seen a lot of different things, whether insurance carriers have changed coverage, premiums have changed. And a big one I think we'll cover today is looking at house prices have gone up incredibly, but people haven't made changes to their policies to cover those. So these are just some things to go over today. Michael, I'll have you give the presentation. And so if you don't mind giving people a short background on yourself and the firm so they can get to know you, and then we can jump in.
Sure, sounds good. Well, our agency was started in 1968 by my mother and father, and I got to say my mother first because she was very instrumental in it. I joined them in 1983, so this is my 41st year in the insurance business, which is a good reason why I have very little hair left on the top of my head. 41 years of working with insurance bureaucracies. You'll see beside my name a whole series of letters. What that really means is that my mother beat the bejesus out of me to get an education. The first one is a chartered property and casualty underwriter. The second is a certified life underwriter. The third is a chartered financial consultant. And in the insurance industry, you can be licensed and sell insurance. My staff is licensed to make and sell insurance. But to really know the details of stuff, to read the policies, you really have to have these degrees. I'm happy to say that my son also has the CPCU and CLU degree. His wife, who also works in the agency, also has her CPCU degree. So education's been very important to us. And if anybody has any questions when we go through this, just bring it up. Jim will read it off of the chat, and hopefully I can answer it. So this is what we're going to talk about. We already talked a little bit about us. We're going to talk some insurance facts just so that you know what's going on in the industry, why we buy insurance, and then specifically we're going to go over the homeowners, automobile, and umbrella liability policies. This is our office building in Keene, New Hampshire. And the insurance dilemma, the topic that Jim wanted. Are you overinsured or underinsured? And the answer is you really have to look at your insurance to answer those questions. So some insurance facts. Insurance costs are one of the fastest growing components of the consumer price index. In the personal lines market, we are seeing rate changes anywhere from 15 to 25%. And the reason we're seeing that is that the insurance industry lost a lot of money in the last few years, primarily due to COVID increasing the rebuilding costs. So if you can picture remodeling your bathroom, what it would have cost 5 years ago versus what it would be today, it's almost double. And when you have an insurance claim, essentially we're remodeling your house if it's a partial claim, or building you a new house if it's a total claim. But there's also this social inflation that's going on, whereby people are suing much more often than they used to, and they're suing for much higher amounts than they used to. Now, insurance policies used to be highly standardized. Today, insurance companies try to differentiate each other through fairly minor ways using endorsements, what I'm going to describe as the most common policy forms. In general, on property insurance, you should self-insure through as high a deductible as you can afford to take in a loss. The thing with the insurance industry is we know we're going to make money long term, even though we're losing money on the short term. We can exactly predict what our losses are supposed to be. So somewhere around 25% of your premium is going to be administration and profit to the company. So the lower you can get your premiums, the better the purchase price is you because the losses are not going to match out to the amount of money that you're going to save on average. When we talk about liability insurance, that is when you get sued for something is liability. You need legal defense and you need to be able to pay the judgment for it. You can never have too much liability insurance. Um, you can be sued for tons of money for reasons that you don't think are really legitimate, but it's the courts that decide what's going to happen. I wanted to caution you to be careful in changing homeowners insurers, as the new insurer will do an inspection. What a company would write 5 years ago easily is becoming much more difficult today. For example, in an inspection today, the insurance company is looking for a roof that is 15 years old or less. They want to make sure that you have railings on all outdoor stairs, as well as the general maintenance of your home. It sounds silly, but if your trim needs to be painted, okay, an insurance company may not like that in an inspection and ask you to actually have the house painted. Now, painting your trim really doesn't affect the losses you're going to have, but the industry looks at it that if you don't take care of your property, there's other things in your home that is not being taken care of that can lead them to a loss. So it's just, you just can't go up and say, I want to go from Safeco insurance to Travelers insurance. If we're going to change you, we want to make sure that your house is going to pass that inspection. And then finally, it never hurts to call your insurance agent to ask if something is covered, as many things are covered you would not think are covered. For example, if you have a family plot for your cemetery where your dad's buried and someone vandalizes the grave marker, you actually have some coverage under your homeowner's policy. So never hesitate to call your agent to see if something is covered. And why do we buy insurance? Well, the biggest one is financial security. Insurance, insurance helps cover the high costs associated with unforeseen events, such as medical emergencies, property damage, accidents, or loss of income. This protection prevents sudden financial burdens. By paying a relatively small premium, policyholders transfer the risk of a potentially devastating loss to their insurance provider. This makes managing personal or business finances less risky. You know, we can all afford a $2,500 claim, or most of us can afford a $2,500 claim. And that's why we should have a deductible of about $2,500. But if I have an $85,000 fire, that's going to upset my budget for this year. So for a little bit of money, I can take that risk and push it off to an insurance company. It also protects valuable assets such as your homes, cars, and businesses by covering repair or replacement costs, legal liabilities if you're sued, and other expenses associated with property damage or loss. The legal requirement. Most states require you to have auto insurance in their state. The state of New Hampshire does not have that rule. On the other hand, New Hampshire will require things like workers' compensation. A very strange fact to me is that uninsured motorist coverage in the state of New Hampshire is about 1/3 of the cost. as it is in Massachusetts, where they actually require you to have auto insurance. And the reason for that is most people in Massachusetts buy the minimum liability limit the state requires, and they think that is enough. And a $10,000 liability limit isn't enough. So they have a bigger problem with uninsured motorists than we do in the state of New Hampshire, as shown by the difference in the rates. How much can you be sued for? This is just a simple thing. It's an unlimited amount. Consider an accident where you disable a 30-year-old lawyer earning $200,000 annually. If he or she is totally disabled, you owe them 35 years of income that they would have been able to earn, 100% of their medical expenses, plus pain and suffering and loss of services. Loss of services is where the spouse can sue saying, my husband can no longer mow the lawn. Okay. So all of that comes together, can be a lawsuit against you. That hypothetical claim is more than $7 million. Now, picture if you have more than one vehicle involved in an accident.
Mhm.
In my 41-year career, I have only had 3 personal liability claims that approached $1 million. They are rare, but they do happen. Recently, I had a client who cut off a tractor trailer truck when they were exiting a highway. The tractor trailer truck just touched my client, so was hit in the back. My client was hit in the back, okay? But it was clear from the witnesses, we cut him off. That truck driver ended up being disabled. I don't know if he's back to work or not, but he's out on disability, and we totaled the tractor trailer truck plus whatever was being held in that truck, what he was shipping. So it can be big claims. So we're going to talk about the homeowner's policy. It covers your dwellings, detached other structures, contents, and additional living expenses caused by a covered peril. So you have a fire at your home and you can't live in your home for 30 days while it's being repaired. Additional living expenses will pay for you to live in a hotel. It will pay the increased cost for you to go out to dinner every night because you don't have a home. So we're going to pay for the building, we're going to pay for your increased costs, and we're going to pay for any contents that are damaged. Liability insurance, which comes as part of your homeowners, is if you are sued for bodily injury or property damage caused by you and not excluded, such as having a policy for businesses, auto, or boat liability. So we're covering a broad array of things. But if it's such a big hazard like owning an auto or a boat, you've got to buy special insurance for it. And these claims come in a lot of different ways. I've had a kid playing around on somebody's deck who got a huge sliver that required an operation to pull it out. I've had somebody hit another person in the face with a golf ball. All of that's covered under your homeowner's liability. Okay. Now, most insureds have a homeowner's 3 policy, which provides open perils, which means everything is covered unless specifically excluded for the dwelling and other structures, but only name perils on the contents coverage. So that's what 80% of the people buy. For my upper middle class clients, I recommend an HO5 policy because it provides open perils on the contents coverage. And therefore, you do not have to schedule all of your expensive property. So, for example, I own a $25,000 Oriental rug. Okay, it's not an antique, but it's a fairly new rug. If my grandkids who are 6 and 4 spill grape juice on the rug, it would be covered under an HO5, but not an HO3. So if you have a lot of expensive trinkets or things that could just get knocked over and damaged, an HO5 may work better for you. And here I'm going to give you a real claim. I had this claim early in my career. Mom takes a phone call while painting stencils in the children's room. The children proceed to paint the walls, carpets, beds, and bureau. Okay, mom went downstairs, the kids went crazy. The HO3 pays for the damage to the walls and the wall-to-wall carpeting because there is no exclusion under the policy for intentional damage by a 5-year-old. But it declines coverage for the contents damage as a child painting is not a named peril. So that's the difference between the 2 forms. By the way, children are not responsible for what they do up until age 12. When the 13-year-old does something wrong, like breaking your neighbor's windows, that's not covered under your insurance. But if a 12-year-old hits a baseball into the neighbor's window, that will be covered under liability coverage. Okay. Now, in your homeowner's policy, you want to make sure that you have replacement cost on your dwelling. So what happens is property limits come from the dwelling limit you purchase. So if you have a $100,000 dwelling limit, your other structures are at 10% of that or $10,000. The additional living expense will be at 20% of that or $20,000. And your contents limit will be at 50% of the dwelling limit or $50,000. Coverage percentages generally cannot be reduced, but they can be increased. Now, for my high net worth individual clients, I work with a company called Chubb Insurance, who does a really fine job. They're one of the few companies that will reduce a contents limit. Typically, to be insured with them, you want to have a house that's about $2 million or more. But they're one of the ones that will reduce it. In most cases, you have to worry if that 50% limit is enough for all of your contents. Insurance companies, when writing new coverage, require you to insure it to 100% of the replacement cost of the home using their replacement cost estimators. Many companies just renew their policies with only inflationary increases, and that has really caused a problem as of late. Because if they've just been going up 3 or 4 or 5%, it has no relation to what we've experienced for building inflation. And within your policy, you have a provision that says to get replacement cost on your loss, you generally must insure at least 80% of the actual replacement cost of the dwelling at the time of loss. And it's your responsibility to make sure you're adequately covered. With the recent building inflation, you should check to see if you're adequately insured. You should be able to call your agent or company to complete a new replacement cost estimator. When we are quoting new business, we are constantly seeing people underinsured by as much as 25% without them even knowing it because they've just been renewing year after year. Now, most companies have special endorsements that if you insure at their replacement cost estimate, they will pay you 125 to 150% of the limit if their estimator is inadequate. So what we're getting here is they tell us to insure it for 500,000. Then we have a loss and we find out it's 600,000. If we have this endorsement that'll increase it by 25%, you're going to be adequately covered. The endorsement is fairly inexpensive and worth doing because in many cases they will provide some additional coverage you might want to have. For example, food spoilage. Food spoilage is just not covered. If the power goes out for a week and you lose everything in the freezer, it's not covered, generally under a standard policy. With these type of endorsements, you can get that coverage. You want to ensure your policy is endorsed to provide replacement cost coverage for your contents. Otherwise, the standard policy only pays you the actual cash value of the item, which is the replacement cost less physical depreciation. Now, we put replacement cost on all of our policies. I would say about 1 in 20 that we quote as new business, we don't see that they have that coverage. So you should have the coverage. Your agent's probably taking care of it, but you want to make sure you have it.
Mike, two quick questions for you on that. If you could go back just that previous slide. One, if people do go, and it's been years, right, since they've done pre-COVID, since they've done any of this quote, does this count as a new quote where they would have things re-inspected, or are they just working on the replacement cost calculator?
They're just working on the replacement cost calculator. So you'd call the agent, my office would redo the number. We would just request an increase in coverage. Now, I will say there are thresholds in coverage where underwriting will change. So, for example, Safeco Insurance, who's a company that we use regularly, they are now requiring central station fire alarms if your limit is $1 million or more. So if we bring you from 900,000 to a million, it could then require you to put in that security system.
Okay, interesting. And
Yeah.
then we have several clients who are modifying their existing home. They're, adding a new wing, or they're making it so it's better for them as they age in place. Are those things that so it it's essentially changing the value of the home, increasing the value, they're putting money into it. Is that also something they'd be looking under the replacement, or would that be a new quote?
Nope, that would just be an endorsement to the policy. And in fact, if you have one of these endorsements that say they're going to pay 125% of the limit that you've got, it's a requirement in that endorsement for any additions to the building that you notify the insurance company. If you don't, it nullifies that 25% bonus. So neither of those two problems should cause a reinspection. It's
Perfect.
really only when you're changing insurance companies altogether that you have to
Perfect.
worry about that. That's not to say insurance companies won't come back every 5 years or 7 years and do an inspection.
Hmm.
Not in the New Hampshire area, but I insure many people out in Wyoming and in Florida where there's really insurance problems.
Hmm.
Almost everything is written what they call the surplus lines market, which is like Lloyd's of London. Insurance companies are now using drones flying through neighborhoods, looking at people's roofs to make sure that there's no mold or anything like that, and then saying, okay, you've got a problem with your roof. You now have to replace your roof. So companies are getting pretty aggressive on making sure the properties are kept up to date.
Well, thank you.
Did I cover that okay?
Yes.
Okay, great. Strongly suggest that you take pictures of every room in your home. Um, when you have a loss, you need to provide an inventory to the company at the time of loss, and the pictures will help you remember what you have. Um, the policy will pay the depreciated value of an item till you replace it. Now, I had a total loss not too long ago in Francistown, and the person had to put together a spreadsheet that had over 3,000 rows of what they actually lost. So you have to tell the insurance company, this is what I lost. So if you own three cribbage boards, you want to tell them you had three cribbage boards. Okay. The same thing for having a clue on what you have for clothes. So what the company will do very quickly is they will pay you the depreciated value because you need money to go out and replace everything. And then they pay you the replacement cost once you actually replace the item. So those pictures, I think, are pretty important to have an idea of what you have in the house.
Yes.
Certain items are limited in your policy. For example, only up to $2,500 for theft of unscheduled jewelry, firearms, or gold. Consequently, you should schedule items of high value. If you scheduled the item, it is not counted in your contents limit. So it gets pulled out of that and it's an additional limit. Scheduling the items also broadens the coverage. For example, mysterious disappearance and the diamond falling out of a setting is covered for scheduled jewelry item, but is not covered under your contents coverage because it's not a named peril. So if you got something that's really expensive, if you schedule it, it's the way to go. I've got a lot of paintings that are scheduled. I have a wine collection that is scheduled. Some people have firearms. Those things, if they've got real value to them, should be separately insured. Now, you don't have to insure everything, right? So one of the things that I tell people is don't insure something you are not going to replace. If you have grandma's diamond ring with only sentimental value, why insure it? You're looking at a financial loss. If you lose grandma's ring, you can take the loss because it's not really part of your portfolio, so to speak. It's very important if your home is owned by a trust to be sure to add the trust as an additional insured to the policy at no cost because the trust is technically the owner of the policy and it will be sued. We need to have defense for that trust.
That's a very important one. A lot of our clients do have trusts and they have changed the deed on the home to be in the trust.
Yep, yep. I've got clients that use LLCs as well for
Mhm.
owning property. So the LLC should be the one that is listed. And they will write it under a standard homeowner's policy. Sometimes we've had to convince the insurance company because the underwriter doesn't know what they're doing, but we can generally get it through. Any questions on the homeowner's policy before I continue?
And for those of us in the attendees list, you are able to um, put something into the chat feature if you'd like, or the Q&A section. You can type those in. But for right now, I don't see anything coming through.
Okay. So auto liability insurance. Bodily injury liability, which generally comes with split limits in New Hampshire, such as 250,000 per individual and no more than 500,000 per accident. What that means is if you're responsible for the car accident, this policy would pay no more than 250,000 for one person hurt. No matter how many people are hurt in the accident, it would stop paying at 500,000 for bodily injury liability. And this is the most important coverage you buy, okay? Because there's going to be a lot of automobile accidents. Everybody is subject to the automobile accident. But it's also important to note that liability follows the owner of the vehicle and not the driver. So if you loan your car to the 16-year-old neighbor next door, it's your assets that are on the line. It's your auto policy that's going to pay. One of the things that I really dislike about direct writing insurance companies such as Geico is that they often fail to keep up with the changing financial position of their clients. I have written doctors and business owners with limits as low as $25,000 per individual and $50,000 per accident. So basically, when they sell new business, they're bringing you on and they're doing everything. But then they almost have a complete hands-off approach and they just renew the policies year after year. In my office, and what I hope every independent agent does, or direct writing agent such as an Allstate or a State Farm, is we're looking at the renewal and we're reaching out to our clients as things change, right? If you're suddenly buying BMWs and Mercedes and giving up the Chevrolets, then we should know that you should be increasing your liability insurance. You have more assets to protect. When you're a young kid at age 18, you don't have a heck of a lot. When you're 40 years old with a home, you've got a lot, and that's why you're buying insurance. It's important to note that the liability coverage only applies in the United States, Canada, their territories, and possessions. If you rent a car outside of these areas, you will need to buy coverage from the rental company or have an umbrella liability policy, okay, which gives you the broader coverage. If you go to Canada, you should ask for a Canadian card, a Canada card. If you get pulled over by the Mounties, they want to see that you've got coverage on the meeting the Canada minimum liability limits, and your policy will automatically adapt to do that. But they're looking for their own ID cards. The property damage liability, that's the car that you hit or the guardrail, or I've had 3 people drive into houses. The property damage liability limit is flat. It's usually a $50,000 limit or a $100,000 limit. Looks like I got a chat in here. Can you pick up the chat, Jim? It seemed
Yes,
like
yeah, I'll ask the question at the end.
Okay, good. Okay. So coverage automatically extends to non-owned autos if they are a replacement vehicle. If you rent a car on vacation, you do not need to buy the coverage from the rental company. If you have liability and collision and comprehensive on one of your own vehicles, you've got the coverage for that rental vehicle. However, if you do not buy their coverage, be prepared for a bit of a hassle, okay, if you have an accident. If you buy their coverage, you can take the keys, throw them on the counter, and say the totaled car is on Elm Street. If you have our coverage, you're going to want to take pictures of the damage. The insurance industry in Hertz and all those rental companies have had lots of lawsuits going back and forth over damage. We'd like you to take pictures so that we know exactly what's being lost so you're not caught in the middle of a problem. If you rent a truck for moving over 10,000 gross vehicle weight, you need to buy coverage from the rental company. So here I am, the insurance professional. My wife rents a truck for me to drive my son's stuff down to New York City when he moves. I never look at the truck. I get in the truck, I start driving. I'm in Connecticut when I say, my God, I may not have liability coverage on this thing. And in fact, when I wanted the policy, I didn't because she got a big, big truck. No claims, no accident. But if you're going to move somebody, think about this. It's always okay to call the insurance agent. Okay, so that's the liability. That's the most important coverage you buy. Physical damage coverage, which includes collision and comprehensive coverage, should be purchased with as high a deductible that you can afford. The pricing depends on the age, make, and model of the vehicle. Newer vehicles get a bigger discount for a higher deductible than older vehicles. So don't just call up your agent and say, add the new car without asking what your deductible is. It's not unusual for people to have a $500 or $1,000 deductible today, but many people still have a $250 or even $100 deductible. So, you want to ask the question, what do I got for a deductible and how much do I save if I increase it? If your vehicles are older, considering dropping collision coverage, which is more expensive than comprehensive coverage. So collision is when you strike stuff. Comprehensive is everything except for collision, although hitting an animal falls under comprehensive for some reason. So comprehensive coverage is fairly inexpensive, and that's good to keep even on an older car to get glass repair. If you change a glass on your car and you don't get the insurance discount, you're going to spend about 40 or 50% more. It's a huge discount the insurance companies get. The insurance companies pay roughly the blue book value of the vehicle. So if you want to say, does it make sense to insure this car? If you go to Kelly Blue Book, you can go in there and put in all your information and it will tell you roughly what your car is worth. An insurance company will inspect the damaged vehicle and they will take discounts off for any damage that you have. They'll give you more money if you have low mileage. A lot of that is built into the Kelly Blue Book by you just saying the car is in fair shape or good shape or whatever. Um, if you have a kid driving a vehicle, if you have young drivers, you want to let them drive the oldest vehicle possible and make sure that they are assigned to that vehicle on your insurance. Okay. And in a lot of cases, I will say, the cost of the insurance for this young driver is too expensive compared to the value you're going to get out of that claim if he totals that vehicle. So really consider going naked on that collision coverage and possibly comprehensive for young drivers because they are charged so much more. That's not to say that the young driver doesn't deserve to pay a whole heck of a lot more. The 16-year-old driver is as bad as the 80-year-old driver statistically. And the 16-year-old driver drives a lot more miles than that 80-year-old. Experience really counts. An important coverage that you get is uninsured, underinsured motorist coverage. If the other party is at fault in an accident with no or inadequate liability limits causing bodily injury to you or passengers in your vehicle, you sue them and collect under your own insurance policy. This coverage is particularly important if you have children, as adults may have disability insurance, but children do not have coverage, and a child needs to be taken care of for a very long time. So if you got grandkids in the car, you want to look at that uninsured motorist coverage. It should match exactly to your liability limits. Now, the policy can come with some ancillary coverage, such as rental reimbursement to cover a rental car if your car is damaged in a covered accident. This coverage is often added, it's about $7, but if you own more than one car, it may not be needed. So I used to have a third car in the family, a convertible. It was no sense to me to have this extra coverage because I had 3 cars on the road. My wife and I would each have a car without a problem. You can also buy towing and road service coverage for much less than AAA charges. Okay, so you can get it at a limit of $25 per towing or $50, or some companies will use the actual loss sustained. Again, protect yourself from the catastrophe. The most important thing is the liability coverage, then the physical damage, and then the ancillary coverage. Okay. I'd like to talk about umbrella liability coverage. This is not an advertisement for travelers who has an umbrella that's red as their logo. An umbrella policy is additional liability coverage is above and beyond your homeowners and auto liability coverage. It protects you from a catastrophic claim. It is sold in $1 million increments. A person is sued for the damage they create, but the demand is often based on what a lawyer thinks you have. A typical $1 million umbrella policy for someone who owns one home and 2 cars is about $350. I personally maintain a $5 million limit. I've got clients with $10 million limits. If you have owned your home for a long time, have no mortgage, own a business, have a high profile job such as a doctor, or any other indication you might have wealth, you should have an umbrella liability policy. While umbrella policies are not standardized, most of them will give you worldwide liability coverage. So if you rent a vehicle overseas, you will have coverage for that. In fact, I had a client insured with a direct writer USAA. He took a trip to Thailand for a month and rode his motorcycle around. USAA swore up and down that he did not have liability coverage for that motorcycle. I asked him to get me a copy of the policy. He got me the copy of the policy. They did, in fact, have worldwide coverage. It's just when you're talking with some insurance agents, particularly at these direct rating companies, they're not as well trained as my staff will be, or certainly anybody that's got the education that I have or my son has. Umbrella liability policies can be written with uninsured or underinsured motorist coverage. And in fact, one of my largest claims was a totally disabled 18-year-old who fell out of the back of a Jeep. The vehicle owner was sued, his limits were exhausted, and the parents' umbrella policy and their auto liability policies provided the million plus to sustain the child. That claim happened about 15 years ago. He's totally disabled. He has a car that he can use the brakes and everything and the gas on his handset. So while he's totally disabled, he's completely mobile. His house is specifically set up for a disabled person. If his parents didn't have an umbrella liability policy, I don't know that he would have the lifestyle that he has today. Now, many of my clients are on not-for-profit board of directors. An umbrella policy feature is that most of them will give you directors and officers liability coverage. So if you're on a not-for-profit board of directors as a volunteer, in most of these organizations, the board of directors hires the executive director, who then hires the staff and manages the organization. If the executive director doesn't do due diligence, the board is ultimately responsible. While the organization might have directors and officers liability, you are sharing that limit with everyone else on the board. So I was on the Cheshire Hospital board for 9 years. They had a $5 million umbrella. I'm on the MAPS Counseling Center board right now. They have a $1 million directors and officers liability limit. However, if you're on these boards, you should maintain your own umbrella policy. And the news provides many examples of where a board might be sued, from abused college athletes to pedophiles. In short, when the damages are severe, lawyers often sue anyone connected to the hiring or supervision. Okay. So if our MAPS counseling does something wrong, it's going to come back on the board ultimately, and I need to make sure I have enough liability coverage so that I'm not on the hook for that claim. That's a great feature of the umbrella policy.
Yeah, most of our advisors here are on boards. One of our other advisors right now is on a families in transition board phone call.
Who's
And
right?
some of those are big organizations. So just like you said, it's never a small, if something goes wrong, it's not something small that went wrong. So yeah, we have required everyone to have that.
Good, good. You've got my contact information here. I'll tell you what I tell everybody, okay? I want to help people with the insurance problems they have. If you're insured with Allstate, okay, and you've got a question, feel free to call me, okay? I may need to look at the Allstate policy, but I don't want people not getting good advice on insurance. So whether you're a client or not, I will help you. If we develop a rapport and you feel comfortable with me and want to have me write your insurance, that's all the better. But I do this in a lot of things for health insurance, property and casualty claims. A lot of people will call me just for advice on a quick one-off, and that is okay. Okay,
Thank you. And then,
and
Mike,
that's it. Thank you.
we did have a question coming through here on the for homeowners. Asking, when did homeowner insurance companies start coming to the house to take photos? And then what kind of risk are they really taking by not taking those photos?
Oh, well, insurance companies have really beefed up their inspections in the last 10 years. Okay, really before that, they would write a policy and it would just sit out there. Um, So it's really been the last 10 years. They are taking a huge risk. I was involved in a total loss of a bar in Keene on Main Street. The entire building burned to the ground. It was insured by Travelers Insurance. Travelers Insurance insured that building for 10, 15 years. There was not a bar in it at the time they wrote it. and they were shocked that they had a barn which caused the total loss. It was a claim over $1 million.
Wow.
So these inspections are becoming more frequent, and they should be. They're taking huge risks.
Yeah. Okay.
If your agent is telling you you're going to get an inspection, okay, go around and pick the place up. So, you don't want to leave leftover tires or too many children's toys. Just take 15 minutes to make everything look neat and tidy because it's a perception of what they're picking up. So, I just had a client who was inspected being non-renewed. He had a woodshed that was kind of a dumpy woodshed. It probably should be non-renewed. But when you looked at the pictures that were sent into the insurance company, it looked like there was a bunch of sawdust underneath a pile of wood that was just haphazardly thrown in there. I thought I had a 50-50 shot that I could get the non-renewal taken care of by having them clean it out, take out all that sawdust, and stack the cordwood like it should be.
Sure.
So perception's important.
Yes. So we just got another question coming in asking if you would repeat the statement about naming a trust on the homeowner's policy. Just,
Sure.
why and
So
how.
so what we're saying there is you want to have the trust named as an additional insured on the policy. Some companies will call it an additional interest. So the named insured is Michael and Tricia Kapiloff. The owner of our house happens to be the Tricia Kapiloff Revocable Trust. So my name and Trisha's name is as the named insured. Then there's an endorsement that identifies the Tricia Kapiloff Revocable Trust. And that way, if the suit comes back against the trust, we've got coverage. The suit's going to come back against me and the trust. We still are going to have the coverage. Okay. You just don't want to have an argument after the fact. Who the hell is this trust? And the company saying we're not going to defend the trust.
Sure. Yeah, that's very helpful. And I just put, I got a whole page of notes, so this is great. But one thing you had mentioned let me see. Well, I'll finish this thought here, and then another question coming in. But many of our clients, when we're building out the financial plan, we're making some conservative assumptions about expenses, and we usually over assume those. Meaning, if in any given year someone had a major expense, and they could typically afford to pay for that out of the assumed cash flow. So many of our clients, if they got a bill for 5, 10,000, would absolutely blink an eye, but it wouldn't have any impact on their financial plan and their long-term quality of life. So when people are looking at increasing their deductibles, that is certainly something to consider. As you're saying, would have a substantial difference in reduction on their premium.
Mhm.
And they would still, if something did happen, the insurance is meant to protect you from something that you can't afford to happen. If you could afford to have a couple $1,000 bill, which again, you blink an eye at, but you could afford, you can have a substantial reduction in your premium. So I do think it's important for our clients to consider. We
I
do have,
use a use a rule of thumb of 10 years. If you measure the difference between a $2,500 deductible and $5,000 deductible, okay,
Mhm.
and you take that savings over 10 years, if the savings is more than the difference in direct deductible, you should absolutely do it. Okay.
That's
Because if you
helpful.
look at most homeowners policies, you're not going to have a claim every 10 years. You're going to have a claim maybe once every 20 years. The other thing to consider is if you had a $2,500 deductible, Jim, and you called me up with a $4,000 loss, I would say let's be very careful about trying to file this claim to collect $1,500 because we could pay that $1,500 back and increase premiums by just having that loss on our record. So
Sure.
we try not to file these little claims anyway.
That's a really good point. Right. You may still be out on the hook anyway. So that's helpful.
Now, Chubb insurance for the high net worth individuals, they will let you buy deductibles at 25,000 all the way up to 50,000. So if you've got, a multi-million dollar house, you can consider doing more of that self-insurance. Most of your standard homeowners companies will only go to about a $5,000 deductible.
Sure.
The other thing that Chubb insurance is really good about is that their building and their contents are always on that open peril basis. The other thing is they use a unique replacement cost. It is replacement cost as your home has it. So if you have Italian marble in your home, they replace it with Italian marble. whereas your standard carriers and their thing is like, kind, and quality. So if you put all of those extra things in your house that are very specific, being with a Chubb is better than being with a Safeco, for example.
Thank you. Some of the questions coming in. One is, as a elected official, should a person have an umbrella clause that written here? So I think they're wondering if that falls under, as you're talking about for the boards, or if there's specific clause you should have, if any, for elected officials.
Well, the first thing, I hope that you got the umbrella before you became the elected official. So if you have an umbrella policy already in effect, the insurance company is going to keep renewing it. Okay. So I used to insure a senator in the state of New Hampshire. There was no question about him still having his umbrella liability policy. If you were applying for a new policy and you're in a high risk position, the insurance company may decline you. Okay.
Okay.
So, there's a lot of examples of people that can't get coverage. If you're a comedian and you're one of those people that do the comedy that's insulting to people, those people have a very difficult time getting an umbrella policy. They have to get it from like a Lloyd's of London, whereas we can get an umbrella policy without any problem that's covering libel and slander.
Yeah, that's fascinating. Okay. And if you have the umbrella, do you need any specific clauses to cover you as an elected official, or is this something where it's just kind of generally covered under the umbrella?
Just generally covered under the umbrella policy.
Oh, cool.
Yep. There's no specific endorsement for it.
Then another question that came in here. See, Florida homeowners insurance is insane. Many are self-insuring and just getting a liability policy. Please comment. My insurance in Florida went up over 5,000 this year.
Yeah, 95% of the insurance in Florida is written by Citizens Insurance Company, which effectively is the state government taking over for the industry, because nobody could make money in Florida. I do write a couple of accounts in Florida. They happen to be part of very big accounts with Chubb. So Chubb is essentially giving me an agency accommodation to write it. But it's very difficult to get anybody to write in Florida. I have two brothers with homes in Florida. I don't write them. I tell them they got to get it local, and it's going to be Citizens Insurance. The only thing I could say is get as higher deductible as you possibly can get to reduce that cost. And yes, I've read plenty of articles where people are just dropping the property coverage altogether. And understand your homeowner's policy, okay, is not covering you for the flood exposure. You have to buy flood insurance separately from the federal government. The federal government only writes up to a $250,000 limit. So for my clients that have homes over 250,000, I've got a series of them on the coast in Maine. We buy flood insurance from the government at 250, and then we buy excess flood coverage to balance out the limit up to their house. Your standard homeowner's policy does not cover flood insurance. Now, when the wind comes through in the hurricane and takes off your roof, that's covered. If the tree falls on your home, that's covered. But rising waters are not covered. So the joke always is start the fire before the water gets to you.
When you talk about the extra flood insurance over the 250, one, is it required that is that sit on top? It's required that you buy the maximum from the federal government, and then two, who do you buy that through?
The answer is it is required that you buy the federal government limit because it works just like a deductible.
Okay.
We use a program with Aon, who's a large brokerage house, who has a program with Lloyd's of London to get that coverage.
Great.
So, and it's where it's needed. The problem with flood is that 30% of floods happen outside of a flood zone. I've actually had a flood on the top of a hill. Okay. So you got a little rise and then you have the storm come through and it's coming down only 100 feet, but you're on the side of a hill. It can flood you out. Um, so it's a real challenge, which is why FEMA, by the way, is bankrupt because FEMA has been coming in almost as the insurer outside of the flood insurance program.
Cool. Let's see if there's any other questions coming through here. In the meantime, as well,
Jim, can I make one other point on FEMA?
yes, please do.
Uh, FEMA has no sense or logic to what it does. We had a flood in Vermont, which wiped out my driveway. Now, I would consider myself upper middle class. My neighbor who shared that driveway is upper middle class. FEMA paid to repair my driveway. I never would have stopped at the FEMA tent and said, "Hey, I got this damage. Would you repair it?" It never would occur to me. My neighbor did it, and they paid the $10,000. So, it doesn't make any sense to me, government giving money to people who can afford to take care of their own problems, but that's what's been going on.
Sure. Okay. Yeah. I just put on here though for our clients, as mentioned, increasing the deductibles. Um, as you had mentioned as well, call about increasing the replacement values is a big one. Um, check in, do they have an umbrella policy? And also, same thing about increasing coverages as life has gotten more expensive and lawsuits have increased. If maybe they got it, but it was 1 million at the time, which seemed like a lot when they bought it, consider the 2 million, consider the 5 million. As you said, it's not a substantial increase in premiums for these umbrellas.
The 2 million doesn't double the price of the 1 million. Okay. It
Right.
goes up like about 50% for the second million and maybe 35% for the third million. Um, so, what I like to do is to make sure that my clients buy as high an umbrella limit, okay, that's going to make them feel safe. I happen to use a $5 million umbrella. Um, 5 million should cover me, but I've got other clients that are multi millionaires, and having the $10 million coverage makes a lot more sense for them. This guy owns two houses out in Jackson Hole, Wyoming, besides a huge house in Keene, and he's got an apartment down in Florida. Lawyers are going to figure out what you've got for assets, and that's tending to be what they're going to sue you for.
Yeah. Yeah. The last thing I wrote on here is as everyone's cleaning their house for Thanksgiving, that might be a good time to go around and also take those pictures and know what you
Yes.
got in your house.
Yeah.
So, yeah, and I had when my wife and I had first gotten married, the place we were renting across the street, there was a fire inside the house. Then there was a news report about the fire in the house, and the gentleman had moved out and was insurance had him in a hotel. But because of the news report, people knew the house was abandoned, and someone broke in after and stole a bunch of items from the house as well. And so,
Well,
fortunately for him, he did have the pictures and is able to show what he had and what was taken and all of those things.
yeah,
Uh,
it's an interesting world we live in. And insurance helps protect you from a lot of it. Can't protect you from everything that's going on, but at least from the big dollar hits that you're going to take, you at least can protect yourself from it. And
absolutely.
that's what our business is all about.
Absolutely. So with that, those are all the questions we have coming. We've had come in. So if anyone does have anything, whether it be personal and you're not looking to put it in the chat, or if you think of something later, please feel free to reach out to myself or to Mike. I said the contact information was provided there. We just take these recordings, scrub the sound a little bit so it's easy to listen to, and then we'll email out to everyone that's registered, but it will also be on our website for anyone that's interested. So I will give everyone back about 5 minutes of their day. And thank you again, Mike. This has been very informative. I've got a whole page of notes in here. So thank you.
It's a lot better than reading your insurance policies, isn't it?
It is. Yes.
Okay. Have yourselves a good day, everybody. Thank
Thank
you.
you and happy Thanksgiving to everyone.
Yeah, bye now.
Bye.